Okay. All right. All right. Good morning to all. Welcome to the Alliance of Angels Fireside Chat. Today, we're going to be discussing trends in startup financing, angel investing, and venture capital. And we are thrilled to have Anu Sharma from Madrona and Nick Norton from BDO to share their perspectives and have a chat, a conversation, an informative conversation for us. Before we go ahead, I would like to ask everyone, if you are not speaking, right, to please put yourself on mute, right? I'm sure your kids are adorable, your dog's very excited, but they do not need to be part of our conversation today. Please put yourself on mute if you're not speaking so that everyone else can have a great experience and we can all learn together. Right, and so before we go ahead, I want to share a few highlights about the Alliance of Angels. My name is Jane. I run this organization. There's 140 angels in the Alliance of Angels. Every year we put about 10 million into 20 companies. Most companies that are fundraising from us, they're looking for a total of between $500,000 and 1.5, and our typical check size is 250 to 500. Right? We are a sector agnostic investor and a stage agnostic investor. So if you're interested in following up with us, if you're fundraising, feel free to send me a note. I'm happy to learn more about your company and explore how it might bring you forward through our process. A common question right now is, given COVID, are investors investing, right? And as far as our angels are concerned, the pace really hasn't changed very much. In fact, it's actually accelerated in the past months. I think part of it has been the public market rally and the strong interest in tech. And in fact, I think this summer was probably the most busy fundraising period that I've seen ever for an August since I've been in the business. So, if you're looking for money, looking for partners for your startup, please feel free to reach out. Don't be shy. All right. And with that, I'm going to hand over to Nick from BDO. He's going to share a little bit about himself and introduce our speaker.
Thank you very much, Ejeng. Appreciate it, and welcome all. On behalf of BDO, a huge thanks for the opportunity to be involved with today's Fireside Chat. I think the fireside is tough given it the nice weather, but we'll continue with the name for today. We at BDO are very proud supporters of AOA and have been for a long time, as well as the Seattle startup community in general. And for those who I have not had the pleasure to meet in person yet, my name is Nick Norton. I'm a partner at BDO. BDO is a global consulting, advisory, and accounting firm. And I spend my time at BDO. Well, if you wouldn't mind just muting if you're not speaking. Thank you very much. I spend my time at BDO fully focused on supporting high growth technology companies, often in a startup space, to prepare for and execute their SOC 2 compliance. So data security and privacy. And also a preferred assessor for Microsoft's SSPA program, where our team helps Microsoft vendors demonstrate their data security and privacy practices in order to work with Microsoft. So that gives us the opportunity to work with a lot of startups in the Pacific Northwest area. And now the reason why you're actually here, it's my absolute pleasure to welcome Anu Sharma with us today. Anu joined Madrona in 2020, so she is a new addition to the team, in where she partners with founders who build products that customers love. She has an interest in cloud computing, machine learning and intelligent applications, and financial services. Anu's combination of product management and entrepreneurship is a deep resource in working with entrepreneurs as they build their companies. So prior to joining Madrona, Anu led product management teams in Elastic Compute Cloud, or what we now know as EC2, for Amazon Web Services, AWS. She led the growth of EC2 Spot instances to grow by 5x, and their accelerated compute instances grown by 10x, which is extremely impressive in the Amazon world. Anu also led the development and launch of AWS's Outposts, bringing AWS infrastructure and services to on-premises locations for the first time, which is exciting. Anu started her career as a software developer at Oracle, founded and led a startup of her own, and also held product and marketing positions at Amazon Payments and Flipkart. Anu, we are so excited to have you join us today. Thank you and welcome.
Thanks, Nick. And thanks, John. It's great to be here.
Wonderful. So first off, Anu, before we get into some prepared questions and go over the remarks that you and I have had to chat about before, you've had an impressive career with Amazon. And the fact that you were leading product manager teams for AWS's flagship EC2 product and then led the launch of AWS Outposts is very impressive. So to help provide our attendees today with some additional context, what really prompted your interest towards getting involved with the venture capital scene in the Seattle startup community?
Yeah, well, there are two things that came together for me. One was I had sort of dipped my toes a little bit into investing right at the start of my career, right after business school. I joined SoftBank Venture Capital, focused on a China and India fund back in 2010. And I'd always wanted to return to investing at some point. With Amazon, this was my 8th year. It had been a while. I had done a fair number of different things, from growing well-established, stable businesses to starting new businesses and new services, grown teams, specifically focused on product management. And when I started to talk with the Madrona team, I realized that I had been so focused, so buried in the Amazon work that I hadn't looked up and seen and looked around how Seattle has been working, how the startup ecosystem had been growing. And I felt like there was something missing as part of what I wanted to do in the next 10 years. And that primarily drove me stepping out of sort of the Amazon ecosystem and the bubble to give back to the community that has taken me into and helped me make Seattle my home. I'm also close to the UW community, so the University of Washington community, just seeing fantastic work coming out of there. So just felt like there was a decade more of work that I wanted to give back to the founders, to the Seattle startup ecosystem, to the engineering community, the practitioner community. I'm really excited about what I'm seeing so far. It's 3 months in, but excited about where this is going.
Well, we're excited to have you here as well. So fantastic. Thank you. So our world is certainly a different place today than it was 7 months ago, as we've all experienced. What are the major trends that you're seeing in startup investing today?
Yeah, I focus on primarily enterprise software and services, and there are broadly 3 major dimensions that I use to sort of identify trends or changes, directional changes in the industry. The first is largely based on technical architecture and shifts. When there's a technical or architectural change or there's a new technology, it could fundamentally change the way you think about an application. Some of the prior assumptions in building those applications could be thrown out of the window, and that sort of gives a wedge into a new generation of software or applications. That's the first one. The second one is focused on business model innovation, and especially customer-focused business model innovation. You could be, for example, removing middlemen. You could be trying to reduce the cost of production, which lowers prices for customers. Overall, for me, business model innovation tends to have a lot of low-hanging fruit, and I'm super excited about that specific area as well. And third is really where customers stand in terms of acceptance in trusting the new technology, the new software or application that is coming into the market. And where is their level of acceptance? For example, a decade ago when the cloud was just coming onto the horizon, people weren't as accepting of the cloud as the way to build applications today. It has become the way, it's the first thing that you want to build your application on if you were building your application from scratch, from the ground up. And so if I were to sort of put some of these dimensions in perspective and call out a couple of examples, so everybody probably is aware of Snowflake, just IPO'd, one of the biggest IPOs in tech. Snowflake introduced changes across the board, across those three dimensions. The first was, of course, technical change. It was built and designed for the cloud. And what it did was it decoupled the compute and storage, as you would imagine, are combined in a server. Today, in the prior world, a server had compute and everything attached together. Now, storage is an S3, compute is an EC2. And decoupling some of that enabled a distributed service that could scale practically infinitely. That also helped reduce costs, which led to business model innovation, where you could now pay based on what you use rather than pay based on capital invested in servers. And finally, they also innovated in terms of product and usage, in terms of building customer acceptance. You could get started without having an enterprise contract. You could just get started with an API. Teams could start building new applications and go from there. You didn't have to sort of close a sales contract the way Oracle did in the last 3 decades. And that kind of bottom-up go-to-market in terms of building confidence, earning trust of your practitioners is also a new way of doing things in terms of building customer confidence.
I know the Hugging Face we had talked about as well, and being able to capitalize on these three trends. How has Hugging Face done a similar approach?
Yeah, so Hugging Face builds off of the transformers technology that you might have heard coming from the natural language processing innovation in the last couple of years. So they're building that, but where they really shine is in the community that they have built, in helping lower the bar for everybody in the ecosystem, whether it's a researcher working on a model or a sophisticated practitioner trying to use an existing model, or a new user just trying to play with a new model and figure out how to build a model from scratch. And in lowering that barrier, essentially they create a hub of a community of people where now I no longer feel isolated. I'm not the only one doing it. And I feel like that's one of the keys to sort of building a big business, where if you are able to target 100x the users than are using a certain kind of product today. For example, there are 25 million developers today. If you're building a product that could be used by 250 million developers, or maybe 250 million people could then begin to call themselves developers as part of using your product, then that's super exciting. Those are the trends that we're seeing today.
In general, Anu, do you find that founders focus too narrowly on an idea at first without considering kind of the 100 times the impact they could make?
I think a lot of founders do well in being specific about the problem they solve, which is great. And great founders are able to connect the dots to a broader vision as to how their product could be adopted and used in terms of 100x the customers that they currently have. So you could start with a small community of users. You could call them data analysts or say data scientists. But if in the future there could be 100 times the users who could call themselves data scientists by using the product or using the tool as a product, that would that really speaks to customers and of course investors.
Yeah, wonderful. And so how do you feel about the Seattle startup ecosystem now, and how do you expect it to evolve as we move forward?
Yeah, great question. There is a lot to like about the ecosystem, and of course a lot of room for improvement too. So I'll talk about the first, what I like. What really resonates for me is that there are engineers who build things with an ownership mindset. And we're really opinionated about this in a nice way, that we build things for the long term. We value our engineers in the sense that they are building things, they're builders, but we also hold ourselves as engineers accountable for customer experience, for operations, for security. And that kind of combined mindset as an owner's mindset is builds for the long term. And that I really appreciate, and I love living with other folks who think the same way. And the second thing, I mentioned this earlier, I love the work that's coming out of UW. For example, the UW Interactive Data Lab does some of the best work in the world in terms of data analytics and visualization, and the team there is just outstanding. I would also say, and this is something I read recently, that the top big tech companies are hiring from UW as in fact, UW is at the top of the universities that these companies hire from, ahead of Stanford, ahead of any other Harvard or any other university you would think of. It's not natural to think of that, but UW produces some of the best technical talent in the world. So those are the things I really love. But there's a lot of room for improvement too, and really I'll just get to the punchline. I think our engineers need to think bigger, and bigger in the sense of what do they want to achieve in terms of what business they want to build and what sort of markets they want to approach. And frankly, the comp bands in some of the large companies which they end up joining aren't necessarily doing them a favor. If you're a young engineer, 2 or 3 years in a large company, the comp bands aren't meant for you. They're not meant for outliers. They're not meant for top tier engineers who are looking to achieve, who are ambitious. That for me is beginning to change. I'm seeing that slowly change. For example, there are a lot of Amazon engineers who have started companies, Alex Solomon for PagerDuty, Apurva for Instacart, and I feel like it's almost beginning to turn into a landslide as I hear more engineers speaking about their company ambitions. But really, I think there is, in terms of directionally improving, what I would say to many of these engineers is that there's a way to balance the structured world that we all experience in a large company where you're told this is the order in which you have to execute and these are the things we have to achieve by the end of the day, and balance that with somewhat of an unstructured world in building a company or a business. And the way to sort of deal with some of that ambiguity is to convert some general ambition into some focused ambition. And I struggle with ambiguity as well, and I've struggled with it at Amazon, for example. A lot of that ambiguity for me, I resolved by staying with the problem, by digging in, by learning more about it. And by the end of it, I tend to know more than most people around me, and I kind of almost sound crazy by the end of this process. This structured unpacking of a problem has gotten me usually to a point where I'm saying things that are opposite of most what other people are saying. That kind of was also the story with Outpost, but we'll get into it later.
So you made two great points there, Anu, in 2 areas to improve. One of them was that we need more engineers thinking bigger, but at the other side of it, we need to make sure that we have focused ambition. How do we get our engineers, especially engineers who are also founders, to think bigger while at the same time maintaining that focused ambition and focus towards where they're headed?
I feel the problems that you choose to sort of dig into it will lead you to the right place. Really, I think it's about finding the problems that you care about, that you're curious enough to work on without getting paid, and oftentimes before you get to the point where you start to get paid or find a way to get paid. But focus is really just about, I don't think you're born with it. I wasn't born with it, but I've found that when I have spent time on a problem, and it could be weeks or months, when I say spend time with a problem, that really gets me focused on why it's not working, and build that insight that then people begin to speak with me about, okay, they think I've done work on it, I feel like I've done work on it, and I'm confident, they're confident that we can solve it. And that begins to build on itself. Customers begin to take you seriously because they realize that what you're saying makes sense, or at least it resonates at some level with them, and then they share more, which then builds on itself as well. So it's the effort we take in unpacking a problem that we choose, we care about.
Absolutely, absolutely. So bring it home. Why do you feel that Seattle is specifically a great place to build a startup?
Well, looking outside, I want to say the weather, but I'll go with the fact that I feel like we have the highest density of fellow practitioners, minus the bluster, uh, and it's all of us. We're super approachable. We ask each other for help, and we're there for each other, and I really love that here in Seattle. I think the second big thing, and in fact, probably the most important reason why you would build a company in any city, is because you're close to customers. And if you're building a product for developers or businesses, you'll probably find more engineers per square mile in Seattle than anywhere else in the world. Mm. Also, you might eventually have to work with Amazons and the Microsofts of the world in either go to market or partnering with them. So that's another great reason to build in Seattle. Now, in the current environment, I'm sure a lot of the interactions, even with customers, are going to become digital first, and that's totally reasonable. My sense is that that just means that the physical live interactions will be even more meaningful when they do happen. And for me, that is probably a dimension that we all want to overlook, but don't quite, at least I'm not able to get past that yet. So being in Seattle matters.
Absolutely, I couldn't agree more. You made an interesting point there that there's no better reason to build a business than being in the city that you're close to your customers. In today's environment, where the point is made, there is not that physical interaction like there used to be with our customers and with our prospects. How do we maintain this closeness to our customers during times of maintaining distance?
It's hard. I have always found that relationships with customers have been long-term, and the customers that I, who have been loyal to the products that we build, it's never done. First of all, a product is never done, and in fact, it's a roadmap is several years long, and those customers stick with us or stick with the team, frankly, and trust us to deliver. And in many of those situations, we just have to talk on the phone. We get on a call, we present, we hear it from them. Obviously, they write in when they are annoyed, and delightfully so, because they're pushing us in the right direction. Most of our interactions have been through conference calls. My interactions with customers. There have been a couple of situations where we do sort of day-long workshops, where we want to whiteboard, where we want to unpack what direction we want to take in the future. And then we come back, we write down what we heard, and share it back with the customer to make sure we're all aligned. We all have heard the same thing, we're taking away the same thing. All of those, like the workshop is useful, but the real value is in the asynchronous communication, the emails that we write down, the clarity that the written documentation brings is far more valuable than the workshop itself. But the workshop is a good anchor to build on.
Now, a topic that's been very close to all of us over the past few months especially, what's your perspective on diversity in the Seattle startup ecosystem?
Yeah, it's a tough topic. I feel like I love the work that several of the companies have been doing and intentionally building processes in hiring, in composition of leadership teams, in company boards. But there's a lot to do as well, and I'd love to see more outcomes in addition to sort of the inputs that we're putting into the feeder processes. For example, I think there's work to be done in tracking how these individuals are performing once they join the company. Is the manager well incented and equipped to support, to coach and champion some of these new individuals in the team is the organization investing and leaning in and promoting some of these individuals. And when oftentimes there aren't mechanisms built in to enable some of these outcomes, people fall back to their judgment, reasonable, which happen to be prone to natural biases. We fall back to existing processes, which have kind of worked over the last few decades, but we aren't quite seeing or have a blind spot on where they aren't working for the new diversity goals that we want to achieve. Or we fall back on case law. Or this is a precedence and this is how we've always done it here, and so we should do this the same way again. And when people fall back on existing processes or case law, some of it actually, at a minimum, it should be open to debate. It should be open for discussion. Mm-hmm. What I've seen sometimes happen, which I hope would change, is that if you park that discussion and don't actually have an open conversation, and it could happen for various reasons. So you're running out of time, everybody's busy, you only have so much time to allocate to performance reviews, or you aren't comfortable talking about a certain topic, then that lack of discussion isn't helpful to the outcomes we want to achieve, in spite of the great intentions and the best intentions all of us have.
Absolutely. Great points, and just to capitalize on that, really, as we're setting the foundation for our companies in the startup phase, creating that foundation with those mechanisms that you were just speaking to, as our core values and as one of those key indicators of ours to then catapult based on that foundation going forward. So wonderful. So for our founders and entrepreneurs on today's call, let's talk about Anu for a second. What does Anu look for in terms of investing in a startup?
Yeah, there are several different views about this. A lot of people strongly favor market size, and others talk about team is everything. I'm a fan of Andy Ratcliffe, CEO of Wealthfront and founder of Benchmark. And he often says, which the idea resonates with me, is that when the market pull is strong enough, it's so strong that it kind of draws the product out of people. The team can take several turns and miss them and still come out wildly successful. So I'm of the philosophy that the market is crucial, and I am, for that reason, very biased towards the market size. The side, dynamics of the market, the nature of the problem, whether there are a large number of users who have a regular pain point, or a small number of users who have a large pain or problem. And so we want to focus on building big companies, and unless we are targeting big markets, it's unlikely to be able to sort of create a big company. So in that sense, for me, market is sort of weighted like 70-80%. I'd say maybe awesome teams are also interesting and important. And for me, that's say about 20-25%. And a small percentage about product. I feel like awesome teams are usually able to navigate themselves to the right product. So yeah, that's the order that I look at.
So with market carrying so much weight, what kinds of industries, product, services right now are getting your attention? And really, what kinds don't capture your attention right now?
Yeah, over the last decade, we have seen that as the public cloud has taken off, it's become easier to write software and build applications. And so there is the technical risk in building new applications has declined, but the business risk in growing adoption and bringing a product to market has grown. There are a lot more products in the market, and we're all competing for the same customer's attention. So the risk, in my mind, has moved in the direction of bringing a product to market. So go to market and related strategies. Great founders get this right on day one, and they build a product from the start in a way that it has the network effects, it has virality, it's tuned for bottom-up adoption, it's tuned for growth without having to sort of go top-down, sign a contract, or spend heavily in terms of a sales team product. And so that really gets me excited. Several of our Madrona portfolio companies are doing this. Pulumi and Fauna are just great, and I love them. So those are the kinds of companies I love. In terms of what hasn't quite drawn my attention, and I've spent a bit of time in the fintech world and financial services, but I haven't quite been able to get my head around blockchain. And this is, just not a dig on blockchain. It's just that I have to come at it from a perspective of customers and use cases rather than the technology. So I'm not as excited about blockchain, if I were to be honest.
You referenced the building the network effects into product and how the Madrona portfolio companies of Pulumi and Fauna have done this. Do you mind expanding on the concept of network effect and kind of how these specific companies have capitalized on that concept?
Yeah, so think about Pulumi. Pulumi is an open source infrastructure as code product. It's how you would automate setting up your application environment, say in the cloud or on premises, no matter where you are. The way they have been able to go to market is they thought from day one is that open source was table stakes for the practitioner who is their customer. And a lot of those customers, if they are already searching for tools or using tools or generating tools in the open source world, that's how they discover Pulumi, or that's how they may both discover and share the work that they contribute to Pulumi. So Pulumi derives benefits from not just awareness and bottom-up adoption through open source, but also through contributions from the community in building the product. If once I've started to communicate and contribute about this product, contribute to this product, I now also have a reason to share it with other practitioners because my success is now also attached to this product. Mm-hmm. And that kind of becomes a viral loop where the more people who are using it and contributing to it, the more people we talk to other people about, and that brings in more people. Having more people as part of the product and open source community obviously adds to the product, which fuels further adoption. So it's a closed loop, which is working really well for Pulumi.
Wonderful, wonderful. What advice, Anu, would you give to entrepreneurs who are currently fundraising?
Yeah, I would say as a founder and as somebody who's pitched both to investors as well as executives at large companies, the one thing that I find useful is have the listener take away something about the product or the problem that they haven't heard or seen before. And you would know this because you would have spent enough time with customers on the problem that you would know something about this product that the investors or the listeners don't know. And really it's the signal of it would be they hear something that's
what? Like it? Okay.
Fairly straightforward and obvious in hindsight, but not necessarily intuitive. And that's super interesting in terms of what they take away as an insight. In other cases, it can be simple. It could be just breaking down where the person stands today, where the listener stands today, and moving them from point A to point B. For example, this is what I did with Outposts. There were 3 points to connect in moving customers or our listeners from point A to point B. The first is customers will want infrastructure outside of our current data centers just because of speed of light. If you want compute infrastructure to be close to, say, an autonomous vehicle, it has to be within a certain millisecond latency to the compute. The second is they want to operate this infrastructure the same way as they do in the cloud. So their APIs, their interface, and their experience should be the same. They don't want a separate stack to build on this new infrastructure and separate infrastructure to build in the cloud. And finally, you know, we had just developed a new system called Amazon Nitro, AWS Nitro system, which developed a couple of years ago, was enabling us to now bring to market a product that was possible. And so that explains the why now. So those are a few dots that we connected in bringing some of our leaders from point A, where, oh, cloud is where everybody should be, to point B, where there are some situations where customers will need infrastructure at locations outside of the cloud or public data centers.
Yep, that's fantastic, Anu. And so for those same entrepreneurs who are fundraising, what questions should they be asking potential investors before taking their money?
That's a great question. I, as a founder, just want to also mention that this is a long-term partnership, and you will be spending 5, 10, 15 years in this partnership, and these will be intense years. And so life's too short to spend it with the wrong partner, number one. Number two is what, you know, if I were to think about what matters to me in choosing a partner, it differs from person to person, number one. It probably also differs from business to business. And so, you know, I can't necessarily provide one answer that suits all, but one of the things I would say is that in most cases, you don't have to ask with the right investor. They know what you need. So they should already be helping you on things that you want help on. For example, whether it's connecting you to customers or introducing you to customers, whether it's giving you honest and candid feedback, looking around corners, making connections and helping with hiring decisions, or actually connecting you with the right hires or to your leadership team. All of those are things that great investors should already know and should be helping you with without you having to ask.
Okay, great advice, great advice. 40 minutes, we just went through a ton of content, Anu. Thank you so much for sharing your wealth of knowledge with us. I know we do have 20 minutes remaining for today's Fireside Chat. I would love to open the lines for our attendees' questions towards Anu. And you can also write them in. John, correct me if I'm wrong, but there's a chat box that you could write in question as well if you prefer that direction. And then the lines are open.
There is there's John asking for email. My email is anu@madrona.com.
Anu, what do you think about the no-code platforms for an MVP product?
I love the idea. I used to be an engineer. Now, as I transitioned to being a product manager, a lot of my work became manually moving numbers, querying databases, and generating reports. I still wish, I don't think I found it yet, is there's a low-code platform that could make my life easier and turn me into give me some superpowers that I wish I had 10 years ago. So I love them.
Hi, Anu. This is Krishnan here. So the cloud is about 15 years old. SaaS applications are about a decade old now. And the infrastructure of the cloud has moved from pure virtualization to containers to we don't know what else. So are you just seeing more incremental improvements in the cloud, or are you seeing any seeds of a fundamental shift in computing for the next decade? Are you seeing any hints?
I would say Snowflake is just the most obvious thing right in front of our eyes, and conveying to me a signal that that's the one application out there that is starting to see success, and it was built in the cloud, built with a business model that was, again, designed for the cloud. And with any practitioner being able to start to use the product. For me, that's just one product, and there is a huge surface area to cover if you were to think about expanding the Snowflake playbook across different sectors and tools. I don't even think we've gotten started on that. So if you think of the cloud stepping down from being the thing to being the platform, and think of what I would build on top of it in the Snowflake ilk, and I feel like we haven't even scratched the surface there.
And then we have a question from David Prokop. How much equity does Madrona typically require?
I don't believe we think of it that way. Like, we don't take a template or a fixed amount of equity for any specific case. It depends on case-to-case basis. It depends on the stage of the company. It depends on the value we bring, the value you think we bring. And so there are a lot of different dimensions. For example, at an early stage company, the company would be putting together its early team. We'll be helping you put together that early team if you'd like. And that structure is different than, say, a seed stage or a Series A company, both of which, you know, would probably take 10 to 20% kind of thereabouts equity, and so on and so forth. So happy to have a deeper conversation on that if you'd like, but and maybe walk you through some specific cases if it's helpful.
Another question anew from John Lawrence. How interested is Madrona in the productivity tools market? And is there a specific partner who works most in that market if Madrona is active in that area?
What I'm super interested in productivity, not just for professionals, for developers, for analysts, for machine learning scientists, for different sets of workers and professionals. Soma, who has been a long-time exec at Microsoft, is also super interested in productivity. So if you want another name from Madrona, he's invested in Coda recently. So you might have heard of that if that's kind of the angle you're thinking about in terms of productivity. But in general, developer productivity is a top theme for Madrona.
And from Dan Rosen, what surprises have you seen in moving from company to venture capital?
I think I'll say this. It's not a striking surprise, but one of the things that I've realized is the difference in thinking about growth. So, for example, in the investing community, I hear a lot about signals. I hear a lot about lagging indicators of what might constitute growth. In the company side of the world, we used to think about drivers. What is going to cause growth, not the signal for growth? We could recognize that, and we'd have metrics to recognize that, but we were more interested in driving and being creative about what would drive that growth. So I am also personally more interested in creating drivers rather than signals. And for me, that is more fulfilling than, and sort of also speaks to deep dive, which was one of the leadership principles that I really admired at Amazon.
From Monique Rain, did I hear you say earlier that Madrona does not think blockchain is interesting tech to invest in at this point in time?
That was just my personal opinion, Manik. And that is also something that I was saying that I haven't yet gotten my head around. I would love to hear applications or customer focus working backwards thinking on blockchain if you'd like to share.
From AJ to Anu, Snowflake has also been successful acquiring enterprise customers.
Yeah.
What do you think is the key to win early enterprise customers, connection of founders or product market fit? How hard is it for an enterprise startup to succeed if the founders don't have strong connections in the industry, but have a good product? A lot packed in there.
Yeah. I'm hearing, I think, the need for a bottom-up go-to-market for enterprise product in all of that sort of as a theme. And yes, Snowflake does well on both on selling to enterprise customers and acquiring them, but also in bottom-up adoption with practitioners and data scientists. and analysts. And in fact, I feel like that a lot of recent companies have been able to do that. I'm starting to, in fact, create an informational series on bottom-up go-to-market. And there are maybe 3 or 4 pointers that I could suggest. One is make sure that you're talking to your practitioners. You might be wanting to get on stage, write an article, write a blog. There are several ways to reach them. Find a way to get posted on Hacker News if that's what you're building for. The second could be build a community. Find a way to find others who care about this problem space. Together, you might bond on just the problem without even talking or selling the solution. And if you agree on the dimensions of what matters in the problem, you'll probably find more community members who will join the group. And that community sort of begins to build on itself, whether it's through word of mouth or through network effects like Bloomy that I mentioned earlier. And the third is, open source has been a pretty strong model that has validated itself in terms of building great businesses over the last decade. And again, strong reasons to open access to code to other folks who want to see how your product is working. And once they understand, that's a way to build trust. And once they have the trust on and understand how your product works, they might even try it. So make it easy for folks to try the product. Find other practitioners who care about the problem and might turn into champions in their organizations or in their communities. More to come on that. I will, as I said, I'm working on an informational series that I will share more broadly, including a podcast series where we will bring in leading practitioners to talk more about winning enterprise customers.
Awesome, awesome. Anu, from Evan X, where do you think the fundamental tech shifts meet the future of work?
Wow. Maybe I will talk briefly about what I saw personally in terms of usage. Tech shifts, let me see if I can get there. The first one was, or at least the change in work style that I noticed was with COVID, I felt there was, before COVID, there was a balance between collaboration and productivity. And this is, maybe not politically correct to say, but the more you want to collaborate, the more you invite disruptions and the less productive you become over time. Unless you're structuring this so well that you'll figure this out. If you're doing that, then great, more power to you. But as we drew into the COVID world, I felt like we became more productive and slightly less collaborative, especially in the creative part of our work, where we were brainstorming or whiteboarding or sort of figuring out the right dimensions of how to think about the problem before we went back and wrote a document and then shared our thinking. So in that sense, I feel that the needle has shifted towards productivity at some expense of collaboration. And so where I feel we might land in terms of, or move in the direction in terms of tech shift is fine-tune collaboration to meet our current bar for productivity. And just because when we're productive, by the way, we're also happier. We're more in control of our things. And it's not like collaboration doesn't make us happy, but it's not immediately tangible in terms of our happiness and what we get out of it.
Interesting point. From Dan Rosen, how do you think of angel investing in the scope of venture capital and enterprise investing in startups?
Yeah, this goes back to a point that we were just discussing earlier, where the technical risk has reduced in building new applications, which means that a lot of that risk could be addressed with angel investors, and that means that a lot of you around here are probably seeing more enterprise software and startups and applications, are also in a position to help founders think about their products and think about how to build from day one to be customer centric and not necessarily, shoot for product market fit, which is just a signal rather than drive adoption. So yeah, I feel like there is, in fact, the public cloud has made it easier and invited more investments from angels.
Anu, from John Ham, you mentioned your investment focus is 75 to 80% market opportunity. What is the starting size of a TAM that is interesting to you?
This is hard to answer because a lot of times the analysis that we do about the market opportunity is very short term. It's replacing either a current product, which by the way, by definition shouldn't be working as well because your product is going to replace it. And so the market opportunity by definition as defined by current products is usually small. The way we think about the market size is how big the opportunity is in terms of the number of users who are going to use it, or how big the problem is, or if a small group of customers are going to use it, a small number of individuals. And so we want to think backwards from what this could be in terms of market size, rather than sort of, while we do analysis on how to triangulate to that market opportunity, we are not necessarily bound by what a specific number could be today. Does that make sense?
In that regard, can I ask a brief follow-up question there? Because with the significant focus on the market, when you're in a situation where you're trying to introduce a product that right now is being done manually or isn't really being captured, right? You often, creating data means the data doesn't already exist. How do you see that play in with such the large focus on product for maybe where there's theoretically a blue ocean, but it's really hard to validate at this point in the process?
Yeah, I would think about two things. One, if this were automated, what would it help the customer or user achieve? So if it would save me 2 hours or 5 hours of manual work, what could I end up doing if I were not sinking time doing something like this? So that's one way of thinking about it. What would be possible if this were possible? Or it could be sort of a bottom-up analysis of, okay, if this is how much I spend on this solution today, that's at least a lower end bookend of how much I might pay for an alternative solution that might do the work for me, maybe in an automated fashion. So there is a cost angle, and then there's a value angle, which might set some bookends.
Anu, from Stuart Marshall, when you talked about interesting trends, you mentioned architecture changes in business model innovation. You didn't mention ML or AI. What are your thoughts on the value of ML or AI?
I see ML and AI as part of the technical shift, actually, as part of the technologies that have emerged, the algorithms that have been able to shift the accuracy in terms of what models can predict. And so it's definitely in the realm of the first dimension. And in fact, it is already changing many of the assumptions that we have embedded in the applications. What can be codified in terms of reasoning and code compared to what can be learned through data. And we have discovered that there is a large class of applications and problems that can just be learned based on data rather than deconstructed into reasoning and analysis and then codified in code. So yes, in fact, I think it's one of the biggest shifts that is driving technology today. And great point.
And 3 more questions and news that we'll try to push through the next 5 minutes. From Michael Murphy, what do you think Seattle startups can offer UW CSE graduates or young engineers inside Microsoft, Google, Amazon, FB, Facebook, Adobe to recruit them away from those companies, especially considering the high pay engineers in Seattle can earn?
I frankly feel the think big is critical here. Are engineers able to achieve their ambitions, their thinking big goals at their current position? Being able to get rich is a byproduct of being able to solve big problems and approach big and find a way to solve them and approach solutions that that can change industries or large markets. And so if we can encourage some of that thinking, I feel they might be more mission oriented in solving a problem rather than immediately short-term financially driven, if I might say that. And in any case, as I mentioned, the comp bands at some of these larger companies, especially for earlier stage engineers, aren't helpful to the larger companies because they cannot, they're not designed to serve outlying engineers. They're not designed to serve top tier engineers.
Anu, what differences have you observed on the funding side since the onset of COVID?
It's busier. I joined Madrona in June, but even just over the time that I've spent with them, it's gotten a lot busier. It's a great time to invest. It's a great time to build. I feel like we're probably being forced to shift our thinking in terms of what the next 10 years will bring.
And Manik Rain asked me a question about another hot topic we're often seeing, but how do you view online fraud and abuse prevention space, specifically account takeover, new account origination, etc.?
Have had firsthand experience of this in Amazon payments. A lot of great work being done with machine learning and modeling. A lot of great work to come, in fact, as we're seeing with some of the startups that we're working with. And excited to dive deeper if you think there's something that we should be thinking about or exploring.
We'll sneak one final question here in the last 2 minutes, Anu. But what advice would you have for current engineers looking to break into the VC space?
As I'm taking this question to mean that you want to build a career in the VC space. Is that the right interpretation? April, maybe?
Yep, correct.
Okay. I'm going to voice an opinion that may not be popular, but it's coming from personal experience, so take it for what it's worth. I felt like the 2 years that I spent at the top of my career in VC didn't necessarily add to my employable skills. I wouldn't try to break into VC earlier in my career. I would experience and generate some sort of filters in determining what it takes to build a business, what a growing business looks like, how to step back from failures, how to learn from them. All of that is experiential. And I don't think you can sort of pick it up by just looking at others. I feel like it has to be experienced. So in that sense, I wouldn't advise it.
Anu, we're seeing a bunch of thank yous come in, and I'd like to extend the same. Fantastic hour spent together. We appreciate it. Yijing, any additional thoughts or items from the AOA side?
Nope. I would like to again thank yourself and Anu for a very informative session. Some folks have asked if the session recording will be shared. We actually, yes, we'll be posting on the Alliance of Angels YouTube channel, so you can check it once it's ready. And once again, thanks to everyone for joining and participating today, and to Nick and Anu for joining us as well. Thank you very much.
Thank you, everybody, for joining. Really, really appreciate you being here.
Thank you all. Have a good afternoon.
Thank you.
Thank you.
Goodbye.